policies. There are individuals like me who get irritated, and then there are economies with a currency like the dirham who actually need inflation. And I believe they need inflation, and I think we forgot in economic theory that we do need inflation. I do think that the currency is totally separate. I do not think that a currency like the dirham can survive. This is like a premature baby. It has no chance. A single hedge fund could unlock the currency, so the only choice of the currency is to be pegged. Now, against what it is pegged is a pure policy instrument and who you want to protect. You want to protect the oil revenues, then you hedge it against something else. You want to protect the exporters, you want to protect capital import, you hedge it against something else. It's a pure policy instrument. And it is independent, I think, from the price inflation. And I think that we have to keep that separate. It is, in any event, and this is, I say that very advisedly, I said that to an official this morning, is that the dumbest thing you can do is discuss currency boards in public. Nobody does that. And it is the best way to make money. And I'm sure I will give it to Michael, and I cannot tell you how much money Michael has made with all these discussions. Because every time somebody says, you know, and he gets all this information, of course he takes the opposing position. And you know, what is the point of doing that? When in fact, it is all about the economy deciding which are the assets that are most precious in future, and you link yourself in a way that this most precious asset has a parity with another currency. And that is very different from the fact that you need to grow incomes and property values and you know, the farmland that were oases before, they're not valuable. That has given a lease of life to the entire indigenous economy. Without that, Dubai would be not half of what it is today. And so I see that very separate. No, you're the only indigenous here.
in respect to this aspect of the inflation, and I understand the whole proposition pushing the economy up, and of course with the low US dollar it makes it very attractive to invest in Dubai as well, and the Middle East generally. So I know that's something Michael, you're always very pro. But if we look at the fuel that's fueling the economic growth here, which is, you know, let's take low-cost labour, for example, right? Now, this low-cost labour, you know, what's the impact on these guys? They're the toughest hit by this inflation. They can't afford to buy the commodities or rent their houses, things like that. Is that something that could pull the wheels off the Dubai economy? Because the very people who are building the infrastructure and fueling that continuing growth, could they have to leave because it's too expensive, both because of inflation and a low US dollar?
I would just say it's called upgrading the economy towards a service economy. It's a natural selection process. It has to happen. The faster it happens, the better it is. The level at the lower end, I think of staff having a 5-year skills gap, 3 to 5 years. And the reason is that they still can't survive on low salaries because they live in Sharjah or somewhere else. The faster people realize that the skills that the economy needs is not 1 million cars crossing the creek every morning for lower rentals, but people who actually move in line with the economy. And when you go to the DIFC, sort of, you see a completely different picture. That is important. If Dubai wants to have a role and sit at the table of the global economies as a transshipment, investment, financial center of some kind, it is not, cannot be dominated by low-cost labor. Sorry.
This might be a visionary statement. People are working that you go back to the Dubai strategy. It is going to that toward that one, but in the process of reaching there, you have to go out of around. We know the population of UAE is around 4.4 million, and out of that one, the workforce is around 3 million. Out of this 3 million, we have around 680,000 construction workers working in UAE. these people came down here to serve back their families at their homes. And the oil revenues have sailed during the past 3 decades or 4 decades. Most of the emerging economies in Asia or Philippines or other Arabic countries like Egypt and others by pumping hard currency to these economies. So it's not only the individuals who have benefited out of that one, even the channelizing, this is one of our rules, we are channelizing these currency down through banking systems, so the economy can benefit out of that one. We do need up to now with all this surplus revenues of oil to re-inject it down in these economies to build the infrastructure which Dr. Gorgian is talking about, but this will take some time. During this time we have to address these issues. Yes, these construction workers particularly, if we take them as an example, they've been pushed or squeezed from both sides. Take for example, who's coming from the subcontinents, they are the majority. The Indian rupees been appreciating against US dollar. The dirhams, because it's been pegged to the US dollar, has been depreciated. So the same amount, that small amount, which is the majority of his income, the normal worker, he used to send it back to his family. He used to have this much of Indian rupees, now it's not giving him that much. This is why we have this kind of unstable and uncomfortable situation for these workers. They have the right to ask to raise their wages or whatever. But I do believe that for some coming few years, one side, one of the big economies in the GCC is the UAE, Saudi Arabia. So they just initiated their new plans and master urban planning and like King Abdullah City and so on. We don't have within our populations, within the GCC, people who could work and do these things. This is a fact. Out of 4.4 million, only 20% is the local of UAE. They cannot participate. We do need all the skills, all the people to contribute like they have done before.
So it's just going to continue to get more expensive to bring in that labour, but that's if inflation is going up, the revenue is going to be more expensive as well.
Probably this is an interesting, I don't know whether you saw this, but the International Herald Tribune picked this up. It was originally written by Bloomberg, and the analogy was that some of our friends here who work on the construction site to build the tallest building in the world, on average make like $240 a month, right? And so basically it takes them, what, one month's work to stay in the hotel they're building, as an analogy, right? And our friends from India, for example, as Osama said, I mean, basically, in the old days, they were considered to be lucky to work in the Middle East. Now, when they go back to India, everybody says, "Oh, you're so poor to be there," because in India, for example, you get 10% interest on your money, and the currency has been going up by 20%. Here, I mean, it depends which bank you're with, but if you're lucky, you get 4.5% in the declining currency. So net, if I'm a construction worker, I definitely don't want to be here, right? But on the other hand, it's quite interesting, even the IPO market. I mean, how many of you have followed this DP World IPO, right? I don't think it's a pure coincidence that the thing actually tanked on the second day, because it's a dollar-denominated investment when everybody thought the next week they'd revalue the currency, which of course didn't happen, right? And I think what's very interesting, and this is an important thought for everybody in 2008, when you notice what the DIFX issued as a statement later, they said very clearly, look, from now on the DIFC and the DIFX for that matter will make it possible for any issuer from any country, any currency to list here. So you could be a South African company listing here in Dubai in South African rand. And I think that's the point that Dr. Gator made, that yes, in that sense, Dubai will be perhaps the most compelling global story. The only problem is that the disparity between people who have money and those is still widening. This is exactly the problem as well. In the world these days, people who have the wrong investments, on their statement it still says it has $1 million, but it's not worth much if you go either to Nairobi or even especially if you're in London, some of the other places. So again, this is a real question. The real purchasing power of money, this whole store of value issue is changing. And this is quite interesting when you look at what people consider safe and what is risky. This whole question is often turned upside down. I mean, the funny thing is these days, what people consider to be risky is actually in the overall scheme of things safe, especially in a well-diversified portfolio. And what people consider safe, quote-unquote US dollar-based investments in money market funds and mortgage-backed paper, AAA rated by Moody's in the United States, actually turned out to be rather risky. And you have mark-to-market losses up to 30%, and some securities are basically not mark-to-marketable. So the real question, how much it really works? I mean, I don't know whether you saw the latest news today. Our friends at Merrill Lynch apparently have to write down another $4.6 billion in write-offs. And these numbers are not small change in any currency, even with dollar weakness, if you convert this back, right? But I think this is why Dubai is a place that's very well positioned, because just linking into this inflation issue and the trends we're seeing in the world, most people still think in a polarized world of, let's say, British pounds, dollars, euro, some Japanese yen, Swiss francs perhaps, right? But in the future, we'll increasingly move into a multi-currency world, where you, in the average bank statement, would say Brazilian real, Turkish lira, South African rand, Sri Lanka rupees, and so forth. And it would be not uncommon for most people to have some money in some of these currencies. And this is, again, just as a concluding thought. Economic history would, or theory rather, would tell you that if a country pays you high interest rates, like Brazil, for example, right, 10%, 12%, the currency should decline. Guess what? Brazilian real this year is up 22% against the US dollar. I mean, Turkish lira in last Christmas was trading at 142 against the almighty US dollar. This morning, we're trading at 118. And they pay you 14% of deposit rate. So, just to think through this inflation issue, the trade for this year was that you should have borrowed all the money in the world you could and put it into Brazil and Turkey, and you make 30% just sitting on the deposit market. But what's also interesting is that when this week and last week everybody talked about a possible revaluation of the dollar, the global banks, HSBC, UBS, and now even our friends at Citibank, actually proposing that the dollar will continue to recover, that the dollar in 2008 will actually strengthen. I don't know how many of you have seen this, but the official bank view from HSBC is that the sterling will decline by 15% against the dollar. Euro will go back to 135, 130, that will roughly 9% decline. Even the Australian dollar is expected to decline by 8%. So again, in that sense, perhaps our local friends here in the central bank are right, that there's no point in devaluing or revaluing when perhaps dollar weakness is fully priced in. I suppose that's a big unknown, but I suppose that individual currency question in most people's portfolios is perhaps the most important decision they will have to make for 2008, whether we potentially could see a rebound of the dollar.
What's the currency in Zimbabwe? Maybe I should buy some.
No, but even though there was like 17,000% inflation in the equity market, you still make money. And I suppose this is the argument for here, the Middle East. I think buying local assets in the stock market, I think, is a very good risk-adjusted return trade. And this is why, for example, what Gordon said, right, that inflation actually is good for this matter. Right? This is why it's actually better to have the money in the stock market here than having it in the bank. I'll give you an example. Another country that a lot of people don't look at is Mauritius. Mauritius inflation, apparently, according to the central bank, is 10%. The bank I work for, HSBC, offers you 8% deposit rate. So every 200 basis point negative spread, right? But the equity market this year is at 70%. So there's the macroeconomics at the end of the day does drive the equity market, or the bond market for that matter, right? So I think most probably in 2008, you could easily see the local markets up 30–40%.
May I just ask a forward? The question is, should the UAE change the exchange rate? And the second thing, will it and when?
Okay. Should they and will they? And when, if they do?
I mean, the should question always depends who you are in this equation, right? I mean, if I were a construction worker at the Burj Dubai, most probably yes, right? But if I'm Sheikh Mohammed and I know that, look, I want to fill property, I want to make sure that everybody in the world from South Africa and all these sort of risky small countries like India, Pakistan, they want to come here, I want the dollar to go down, because then this place will be even more people from all these emerging markets here, right? And then for them it's suddenly cheap. Remember, it's like when you go to Fifth Avenue now in New York, when you don't hear much English anymore. It's English, English is, you feel in the minority. There's Spanish, Portuguese, German, French, Swiss German. They speak all foreign languages of Physik, you know, because New York is so cheap for Europeans today.
So will they? And when? Or now?
Okay, basically, the IMF, I think, has the best answer to this. The IMF, I think, 5 months ago issued a very interesting report and talking about global revaluation, and they issued that basically the point is this: the global imbalances in the economy globally have to be resolved through two aspects. One is Asia, led by the Chinese, and the Arab oil-producing countries. But the Arabs are most probably not going to move before the Chinese. And the Chinese are buying time. So the Chinese most probably going to wait until the end of 2008, 2009. But this is why, for example, Goldman Sachs, which tends to have a good track record in some of these things, is predicting that the best investment for 2008 is to buy Asian currencies. So go to your bank, borrow as much dirham as you can, shift everything into Korean won, Singapore dollar, Malaysian ringgit, because these currencies will have to appreciate, right? And then sooner or later, they officially let the pack go.
So I'll translate that. That means no, they won't.
The timing is basically everybody's buying time. It's not a question of when, and it's not a question of if, it's a question of when. And when, most probably, is going to be another year and a half, 2 years, most probably.
Okay. So
I believe it's going to happen, but might go gradually before they finalize, you know, what's the final rate to go for that.
do you think it's peaked this issue of the global, the GCC currency?
Even Kuwait, which is a basket of currency, the majority of such basket is US dollar. It's very well known because they depend on the oil revenue as well. And they don't disclose what's the weight of such currencies within that basket to keep it more, you know, controlled, so they eliminate speculation. But I think it's became more clear now. There are a lot of workshops actually between government prior to the summit. You know, they conducted a lot of sessions. They brought experts, even from the European Central Bank. They've been participating down here to understand what is the best rational decision they would go for. The governor, for example, of Central Bank, he kept it quiet for so long time. And until when he was in Japan, he spoke about the crossroads, you know, and it was kind of indication. Many people, even I saw some officials and ministers from other GCC countries who were negatively commenting that he should not have talking about that one. They said such issues should take place overnight without disclosing anything if you want to go for that one. So you minimize any kind of, you know, disturbance within the market like what we have gone through. All was rumors and